Hi, this is Michael Yardney, and welcome to the first of two special podcasts I'm going to be conducting in this special series of how to profit from renovations and property development in our property markets. This is very different to my weekly Michael Yardney podcast, a special topic because it's something so many people are asking about, and these are slightly longer podcasts than my 20-minute sessions. But this program's for you if you're a beginner to property investment and want to fast-track your portfolio. This series of two special podcasts is for you if you already own some investment properties, but you're stuck having difficulty getting to the next level. It's for you if you're looking for more cash flow to help service your property investment loans. And it's particularly for you if you're already an experienced investor and want to move up to the next level and get involved in property development or property renovations. So in this first session, I'm going to share with you the 8-step process from profiting through renovations. I'm also going to explain to you a little bit about how the current economic, property and finance markets affect renovations and development strategies. And then in the second of this two-series podcast, I'm going to be joined by Bryce Yardney, a property development expert, to discuss the 9-step process for successful property development. We're also going to have a bit of a chat about where to get started if you do want to become a property developer in the future. Now, I'm going to give you some tips on how to save thousands, maybe tens of thousands of dollars when you do renovations in this session today. And it's something I only normally discuss at my annual property renovations and development workshops. So it's something that most investors don't know, don't find out. And these tips have been worth hundreds of thousands of dollars, I guess, to me over the years. I'm also going to explain the steps that you need to undertake, the steps you need to understand if you're going to do your renovations yourself. And this is particularly relevant to you in this more complicated market. So stay tuned as we go through all those things. And as I said, this comes from my annual property development workshop that we hold in October every year in Melbourne. And if you're genuinely interested in taking your investment up to the next level to get involved in property renovations or property development, why don't you go to realestateworkshop.com.au, realestateworkshop.com.au, and find out all about this special 2-day event that I've been running since 2003. Now, I've put this series of two special podcasts together because in the current economic climate, lots of investors are wanting to get started in renovations and development. But they seem to be getting the wrong advice. They're getting it from TV shows, the block and the renovation shows, and they're getting it from a number of seminars and courses where, in my mind, they're getting incorrect, unrealistic expectation. Now, there's some very good educators out there, but there's others who've only done a few renovations or one or two developments in a booming market, which has covered up the mistakes, and now they're going to be getting themselves into trouble, these educators, in our changing property markets. So why am I qualified to give you this advice? Why would you listen to me? Well, I've been investing for over 40 years and I've made all the mistakes and I've learned all the mistakes to make and how to correct them. Interestingly, I've probably educated more successful investors than anyone else in Australia. I've published 8 books and more articles than any other Australian author in the areas of property and money and success. I've worked with hundreds and hundreds of clients all over Australia, from beginners to very, very successful investors. We help a lot of beginners, and once a year at Wealth Retreat, we get together with Australia's most high-end property investors. And I've done it myself, and I've kept it, and I've kept my wealth over the cycles. I did my first renovation in 1970s. I made a mistake. I even remember it. It was in Bond Street, Caulfield, and I was painting the kitchens, and nobody told me to open the windows and let fresh air in, and I got myself so sick with all the fumes. Currently, I'm involved in 4 property developments personally for myself, and my team at Metropole are project managing over 50 medium-density property developments currently. Last year, our team was involved in 70 renovation projects. That's last year alone, and much the same the year before that and the year before that. So who are you going to listen to? Somebody whose last year was talking about buying cash flow positive properties and this year telling you about renovations, or a team that have done it the whole time? That's why I think I'm going to be able to help you in this special series of 2 podcasts. Now, interestingly, a couple of weeks ago, I was rung by the editor of a major money magazine, and they said to me, "Michael, how long does it take for property values to double? And is there any way of speeding this up?" Well, I gave the editor an example of if properties increase in value by 7% per annum, which is about average in our good capital cities. They double in 10 years. But that's not every year. They don't increase in value by 7% here. Sure, in Melbourne and Sydney in the last couple of years, property values went up much more than that. And there's other areas around Australia where they went up in value much less than that. So how do we know what's going to happen in the future? I think we're going to have lower periods of capital growth, and it's going to take longer for property values to double. I think in the lower interest rate environment, the lower general economic growth environment, lower wages growth environment, we can't count on the market doing the heavy lifting and creating the capital gains and capital growth. So the editor of the magazine wasn't too happy with that. So she asked me, well, how can you speed up the growth of your properties? And I said, well, you can actually manufacture capital growth. Well, she said, well, I said, what you can do is make capital growth, force capital growth by adding value through renovations and particularly through development. She asked, well, is that appropriate in this current market? And the answer is even more so, since the markets have slowed down and you can't count on the market itself doing the heavy lifting. So in my mind, adding value through renovations is a great way to not only manufacture capital growth, but increase your rents. So if you get involved in a renovation and do it correctly, the rents will be worth more. Your property will be appealing to a wider range of tenants, so your vacancies will be less. You'll get great depreciation allowances, even in the new tax environment where depreciation allowances are less, and you'll add value to the property. Now, a really good example of this, and I actually gave it to the journalist, was of a client of ours who bought a property in Melbourne. And this young couple bought their second investment property using our buyer's agency services. It was a villa unit in Malvern. It was old, it was tired, it had brown architraves and skirtings. There was an elderly lady who was living in it who moved out to go into a nursing home. It was in a great position, walkable to the trams, which is very important in Melbourne, to a small local shopping centre, park down the end of the street, a school down the other end of the street, a great location. And interestingly, villa units are an ideal form of investment because they have a land component to them, and they also attract owner-occupiers. In fact, there was a lot of young families in that old complex, which in the old days would have been older people retiring. Anyway, back to the example. It was in East Malvern, and our clients paid $680,000 for it. And for about $80,000, they did a renovation. Now, it was a bit more than the average renovation because there was new kitchen, new bathroom, split system air conditioners. We pulled up the carpets and polished the floors, put new carpets where the carpets were appropriate. We rejigged the layout of it because while this villa had a courtyard, it wasn't really accessible to the living areas. And so by moving the laundry and rejigging things, it suddenly gave great indoor-outdoor living areas as well, which is how modern people, how we live today compared to the old days. And interestingly, adding that $80,000 to it increased the value of the renovated property to about $820,000. In other words, $680 plus $80 and brought it to, I know, about $760. But the value increased considerably. It rented straight away. It did really well. Now, interestingly, there's another apartment or villa unit in that complex that just sold just under 2 years ago now for over $1.1 million. That's what's happened to buying the right property in the right area, adding value and making it more attractive to a wide range of people. So it increased the rental return and therefore the yield, making it easier for our client to service their debts and service more loans. It gave them great depreciation allowances. It increased the aesthetic appeal of the property. And as I said, it attracted a wide range of tenants, very quickly leased to, and I'm not trying to judge people, but to a better quality tenant rather than the lower socioeconomic type tenants, and increasing the overall value of the property by manufacturing capital growth, even in an area in a market that if it would be flat, this would still occur. I'd like to share with you my 8-step renovation process that we go into great detail in at my property renovations and development workshop, where we go into each step in detail with all our spreadsheets and all our checklists and all our due diligence and how to do the research. But it basically falls into 8 stages. Step 1 is why. What's the reason? What do you hope to get out of the renovations? Step 2 is the preparation. getting the finance to do it appropriately, getting the ownership structure set up to purchase your property appropriately. The third step is where. How do you research the right areas in which to do to do renovations? The fourth step of the 8-step renovation process is what? Which property are you going to buy? Find the property, the right sort that you can do to add value. What due diligence do you need to do to be able to do that? The fifth step, the exciting one, I guess, in some ways, is buying the property. But you've got to buy it at the right price. How do you know what the right price is? The sixth step is to plan and to budget before you start the renovation, considering your target market and the end values that you have in mind. The seventh step is finally you actually get to do the renovation and create a higher, better use. And the eighth step is post-renovation. And my preferred strategy is to renovate the property, to lease it out, to refinance and repeat. Now, I know some seminars and books and magazines are saying buy, renovate and sell. The answer in today's market is no, it doesn't work and you're going to get burned doing it. There's a long list of people, the internet is littered with them, who've lost out on that strategy. Investors who are just starting out need to understand you won't make a big enough profit to sell on completion. Not unless you've actually made a substantial change, like adding an extension. And a lot of those things involve getting permits. That's not a renovation to me. That's a baby property development. It involves getting development approvals, council approval, owners corporation approval, maybe your house approval. And it takes a lot longer to do. And that's not for beginners. Beginners should cut their teeth on simple things. So you just can't buy, renovate and sell in this market. So does that mean it's a bad time to do renovations? No. To me, renovating for investment should be managed like a business, where the end goal is to come away with a commercial profit. But you do that by creating a good asset, one that's going to appreciate in value over the long term, not necessarily by selling the property in the hope of making a quick dollar. Remember, wealthy investors, strategic property investors, build assets. They're not going to make money by quick cash flow or turning things over. They're going to build assets that one day are going to replace their personal exertion income. So let me now give you 5 quick renovation tips so you can get some real value out of this podcast already. Then I'm going to go into a bit more detail about those 9 steps. Now, I know there's a way to buy, renovate property in order to grow your wealth. You just have to go about using a sound buy, renovate and hold strategy. And maybe you should be following these rules. First of all, determine the right purchase price. Buying at the right price is crucial because it ensures you're going to make some money at the end when you've done the refurbishment. If you pay too much at the outset, you're always going to be chasing your tail trying to make the project profitable. Now, I know you make your money when you buy a property by buying the right property, not by buying it cheaply. But in renovations, you also can't afford to overpay. Before you start out, you've really got to determine what the end value of the project will be when it's completed, when all the work's done, by researching value of similarly renovated properties in your area. Once you've got this end value in mind, you've got to draw up an initial project budget to calculate the approximate renovation costs and expenses. And then you've got to get a building and pest inspection on the property so you know exactly what you're getting yourself into and you can plan accordingly. Then you subtract all those costs from the end value. Then you've got to allow yourself a profit margin. But remember, the costs will include interest and holding costs and letting fees. And once you've subtracted all this, this will give you a fair idea of how much you can afford to pay in order to make your project financially viable. Now, it's said that you make your money when you buy a property, and that's true, as I said. So you still have to buy the right sort of property in the right location, something that's going to be an investment grade property, because, as I said, I'm hoping you're going to keep this in the long term. So tip 1 is determine the right purchase price. Tip 2 is be realistic about your budget and your abilities. You see, the job's always going to cost you a lot more than you thought and take longer than you expect. So to minimise cost blowouts, it's really important to get a good team of people around you. If you're not a handyman, if you're not a tradesperson, hire a builder to coordinate your project at a fixed price, at a fixed time, fixed price contract. Managing different trades such as plumbers, builders, plasterers, look, it might save you the builder's margin of $5,000 to $7,000, but it's essentially false economy. I believe you should be the project manager of your project. The renovation is likely to take longer and cost more as a result of you trying to do it yourself. So don't refuse to pay money to the builder. They'll do it all for you and give you a fixed time and fixed price contract with an HIA warranty. And it's always better to have one point of contact in my mind. I want you to be the movie producer of the project, come up with the ideas and be the coordinator, but let other people do the hands-on work. I want you to see a property's potential and then get the other people to fulfill that potential. The third tip I'd like to share with you is consider the demographic of the market in that area. So don't think about how you want to live or how you would live. Talk to your property manager, determine the predominant demographics. In fact, you should already know that from the homework that you've done. And remember that you should be building a property, renovating a property, I guess, to owner-occupier appeal. Not that owner-occupiers are going to buy the property, but that's the sort of property that the valuers are going to walk in and say, wow, if this was to be sold, we'd easily sell it on the market today. The fourth tip is don't get personal. Another mistake I see investors make is they become too personal about the renovation project. Remember, you won't be living in the place, so putting your own personality in the property is not necessarily a good idea. Despite what you've seen on TV shows like The Block, don't allow yourself to get emotionally involved because it's not about making a designer statement. It's about you making money, and as such, the completed project, the completed renovation, the property should appeal to the widest range of potential tenants. So your goal should be to provide them with a relatively blank canvas. So if you keep things simple with neutral decors while making the property livable and functional, you can't go wrong. And the fifth tip I'd like to share with you right now is don't overcapitalize. So I guess the million-dollar question is, how much do you spend on a renovation itself? Look, in general, I've found for a renovation, which is not doing structural work, around 10% of the value of the property is a good ballpark figure. If you only spend a small percentage, too little, you can't add much value. For instance, a coat of paint may only cost you a couple of $1,000s, but it won't add much value. It'll just make a property more attractive and appealing. Whereas if you spend $50,000, $60,000, you'll often get $70,000, $80,000 back. But my recommendation is when you're starting off, you should only renovate properties that require cosmetic improvements rather than major structural changes. Because a lot of the more expensive work involves things that you can't see and people won't be willing to pay extra for them. Things such as upgrading the plumbing or running new electricity or things like that. You actually just can't see it and you won't get good value for it. With that introduction, I'd like to go into a bit more detail about a few of the 9 steps in the renovation process. But before I do, I'd like to take a short break and explain about how you could learn more about this process. You see, once a year I conduct Australia's leading property training, my property renovations and development workshop. It's really your chance to spend 2 powerful jam-packed days and learn the renovation and development strategies that experienced property investors using around Australia to manufacture capital growth and generate strong rental returns so they can win in today's challenging markets. If you want to take your investing to the next level, why not get the scoop by going to realestateworkshop.com.au. We've been busy over the last couple of months making it the best advanced property training ever. There's nothing to sell there. It's a training and it comes with my pedigree and my personal guarantee. Why do I say pedigree? Because I've been running this since 2003 and it sells out every year, and I give my personal guarantee that the attendees are going to get value for money, that they're going to get what they want out of it. And you know what? No one ever takes it up because they get it. Why don't you go along to realestateworkshop.com.au and grab one of the remaining early bird special places, because if you get one of those, you're going to have a one-on-one strategy session with me at the end, an implementation session. Plus, you're going to get all the other bonuses as well. When you come to my property renovations and development workshop, you're going to be spending 2 days with some of the sharpest minds discovering proven systems and strategies for property renovations and development in Melbourne each year in October. You'll get good finance, tax, structuring, renovations and project people there. No get-rich-quick schemes. We're going to give you real-world answers to real problems faced by investors in today's changing markets. Okay, let me get back to how to make money through renovations. I went through the 9 steps right at the beginning, but we're going to go through a couple of them in a bit more detail now. Step 1 is why. The first step to understand is why you're getting involved in renovations or development. Do you plan to improve the property and then sell for a quick profit? As I said, that's not easy in today's market. Or are you planning to improve your property, manufacture capital growth, get increased rental returns, and then keep that high-performing property? That's my preferred strategy. Or do you have some other use for the property? I mean, with the block, they've got another use for the property, don't they? They're actually making a great TV show out of it. That's probably its highest and best use. Anyway, as I said, my strategy is to buy, renovate the property, hold, and it's very, very hard to make money flipping properties today. You need to treat this like a business, which is step 2. You've got to get your finance and structures in place. And at my property renovations and development workshop, you're going to actually have access to a number of finance strategists and also a tax specialist, Ken Race, who's going to talk about the right ownership structures. And finance is going to be one of the things that will either allow you to get going in property renovations and development or hold you back. And that's why we spend a bit of time talking about it, telling you how finance for renovations and development is different to just buy and hold. Step 3 is to research your target area. As you've often heard me say before, location does about 80% of the heavy lifting in the performance of your investment property, but you still need to buy the right property in that area. But we're looking for locations that are gentrifying, locations where people have got a higher disposable income so they can afford to, but are also prepared to pay a premium to live in those areas. And as our big capital cities mature, proximity to infrastructure and amenities and transport is going to be very, very important. And at the Property Renovations and Development Workshop, we give you all the research that we do to choose those areas. Step 4 is buying the right property. You've got to do the right due diligence. You've got to have the right floor plan, the right layout. You've got to find one that doesn't require structural work, especially hidden structural work. And that's why with any building that we get involved with this, there's not an apartment block where the owner's corporation looks after the structural thing, but if it's a house, a villa unit, a townhouse, what we always recommend is you get a building and pest inspection, because you'll be surprised by some of the hidden things that come up. Another fundamental rule is that you make your money when you buy your property, and that brings you to Rule 5. You actually have to buy your property at what's wholesale. In other words, at a price that will allow the development profit. Now, a moment ago I shared with you how I do that. So I work backwards from the end in mind, what the end value of the renovated property is, and subtract the holding costs, subtract the renovation costs and some time, and make sure you have enough profit margin. Step 6 is budgeting and planning. And as I've already said, don't overcapitalise. And you really have to leave a contingency, a significant contingency, because there's always surprises. And on that basis, I'll give you at the workshop some worksheets and templates, because unless you have all these things accounted for, you're going to get some surprises. You've also got to get things in the right order, otherwise it'll cost you more. It may take longer and people have to wait. So I'd like to spend a bit of time explaining the renovation process itself. Now remember, I suggested you don't do the work yourself, but you act as a project manager. So first thing you've got to do is work out which tasks to outsource, what needs licenses, what doesn't. And often I'm going to suggest you hire a project manager. The next thing you look at is what requires council approval. It may not, but changes to the exterior would, especially in character areas. Internal structural changes will require council approval. Sometimes moving the plumbing or adding more floor area could. And if so, you're possibly going to need architect's drawings, and sometimes you even need approval from the owner's corporation to put a skip in or to put an air conditioner on the balcony. So you also got to check with the owner's corporation, talk to them, check out the rules, what limitations are there. You may need permission to do things like, as I said, putting an air conditioner on. I mean, it's your property, but still they're going to make a fuss, or put a skip in the yard. And especially if you've got structural changes or changes to the exterior, you're going to have a chat with the owner's corporation. The next part of the renovation process is to source trades. And unless you're an experienced renovator who've got a team of people that you use all the time like we do at Metropole, you should get quotes, especially for the bigger jobs, and multiple quotes, a few quotes, and set out the scope in writing. So before you ask for a quote, you've actually got to write it down exactly what you want so everybody quotes for the same job with the same basic information. Otherwise, quotes can vary considerably because they're quoting on different things. And when you arrive and when the tradespeople arrive on site, have handwritten specifications on site when they arrive explaining exactly what's going on. We have a whole lot of notes all over the properties at Metropole so that people know what to do, what not to do, what to take out. The next step in the renovation process is to purchase the materials, and this often happens after discussions with tradespeople. Sometimes they're going to provide the materials, sometimes you will. It could be taps, blinds, light fittings. So open a trade account with preferred suppliers, because opening a trade account will allow you to get discounts. Or sometimes it's actually easier and cheaper to get the trades people to supply them. They've got the trades accounts and then they won't complain that they're not there on time, they're not right, they don't fit. But if you are getting them yourself, you're actually going to need timely delivery ready for the trade, so they're not hanging around, the tradespeople aren't hanging around waiting for goods. But if you get them there too early, they'll get stolen. Imagine if you leave a dishwasher there over the weekend and it's not installed. Step 6 of the renovation process is actually to determine the order in which the trades and service providers come. So this depends upon the nature of your renovation. Sometimes trades will overlap and work simultaneously, but it often starts with an architect or a structural engineer if there's works required. Sometimes you have a quantity surveyor to get rid of a scrapping schedule if items are written off. You've got to have the builder on side. We usually start off with a labourer who cleans out the property, demolishes things, pulls out the old kitchens, pulls out the old appliances, and you therefore need the plumber and the electrician to cap off the services, the electricity and the plumbing if you're pulling out old appliances. One of the first new trades to go in is the cabinet maker, because they take time. We don't buy flat pack kitchens. You can get them. They're not good enough quality, in my opinion. So the cabinet maker comes in because the kitchen has got to be made specifically for the shape. The cabinets in the kitchen and the bathroom, I guess, really have to be made for the specific shapes that's there. Then we get the electricians and plumbers and plasterers in, and then the painter comes to fix it all up. And then the cabinet maker installs the new kitchen and bathroom cabinets and maybe any robes that you've got. The next step is the tiler comes in, and then the painter's got to come back again to finish the touch-ups, because there's always little scratches and things go wrong. And lastly comes the carpet layer, and if you're doing a house or villa unit, the landscaper, and then the cleaner comes round to clean everything up, and you may need a building surveyor to certify structural works and a quantity surveyor to do a new depreciation schedule. So there's lots of people to coordinate. You don't personally have to do the work. Your job may be just to coordinate it. You've got to regularly check the site and check the trades are there and the work's being done, and you've got to be there to troubleshoot. At the end, you clean up. Then you pass it on to your property manager to lease, and then after a period of time, you can't refinance them straight away. You get refinanced and you go again. So look, I've given you lots and lots of information, and as a beginning renovator or even as an experienced one, sometimes you don't know what you don't know. So maybe you need some help to show you along the way. Maybe you need some experienced people, not just tradespeople, and that's why we have a specialty faculty at my annual Renovations and Property Development Workshop. As you know, over the next couple of years, strong capital growth won't be around to cover up your investment mistakes. That's where really understanding the full process of renovations and development, not just the glitz and the glamour part, come to the fore. So go along to realestateworkshop.com.au and register your interest and come along to our 2-day workshop. I suggest grabbing your seat early, because if you're one of the first 50 early bird specials, you're going to have a one-on-one strategy session with me. This is your chance to spend 2 powerful days and learn the renovation and development strategies that experienced property investors using around Australia to manufacture capital growth, get better rental returns so they can win in today's challenging market. Thanks for listening to this podcast. It's a bit longer than my normal weekly Tuesday Michael Yardney podcast. I hope you get that too at michaelyardneypodcast.com. But in this special 2 series of podcasts, I want to share with you the strategies for becoming a successful property renovator or developer so that you can increase your returns in these more challenging property markets. Watch out next week for the Property Development Podcast, where we go through the 9 stages of the property development process, and I look forward to catching up with you in October at my Property Renovations and Development 2-day advanced workshop.